Welcome back to another live stream. It's Mr. Keynes and Dr. Keen, the economic live stream. Steve's not here today, but we're going to be talking about taxes. All the different taxes. We've got income taxes, we've got sales taxes, we've even got transaction taxes, we've got wealth taxes, all the different taxes you can think of. We're going to talk about. It's going to be a whole lot of fun. I've got Dave and I've got Mike here. Stay tuned.
You are now relearning economics.
Welcome back to the live stream. I hope everybody's well. Make sure you hit that likes button, subscribe, hit the notification bell, leave comments underneath the video. Join the chat if you're on YouTube. Chat, ask some questions. If you're on X, chat, ask some questions. If you're on X, you want to come over here, do it. It's up to you. It's fine. I will allow it. Make sure you check out my Patreon, patreon.com/relearningeconomics, or you can find me at relearningeconomics.com. Let's bring on Dave the man. Dave Folks. Dave Folks
Howdy.
In the house. How you doing, Dave?
Got to give our own clapping these days. We've lowered the budget.
Yeah.
Two fingers.
The button app really slows down my laptop, so I had to delete it. So
How are you, man?
oh, I am cheery. I'm cheery. We're talking about taxes.
Oh, do you love taxes? So you're
I love taxes. I love every form of them. And I love swapping one tax out for another tax. I think it is a fruitful discussion that's not going to cause any division. It's not going to cause any anger, and everybody's going to agree on it.
And but we don't have anybody advocating for the taxes theft side. Is the only thing missing from this?
Trust me. Well, every time I pay a tax, I feel like I'm being robbed. The question is,
do we need it?
Do we need taxes? I guess we can bring on Mike. I see him in the background. I hope he's ready, facing the camera, looking good, sitting up prim and proper. Here he is, Mike Radzicki.
Always. Lord Keynes, how are you? Brother Dave.
Hey, Mike. Good to see you, man.
Yeah, thanks. I was just fishing around in my bookshelf here in case I needed to talk about something.
Oh, taxes.
Thank George.
Taxes.
Enlighten me. Is that the Georgist Bible? Is it?
Yeah.
Right.
Yeah.
Okay.
I'm
glad someone's able to cover that, because I was thinking, hang on, obviously I know of LVT, very, very much know about the principles, but yeah, I don't know the ins and outs. Mechanics.
So LVT, I'm assuming you guys, we got to make sure we don't use acronyms today. So we're talking about value tax. So we'll make sure that in case people don't know, so people of certain tax regimes may know their abbreviations, we'll make sure we use the full word. And we're going to start with the big one, and that's income tax. I want to talk about it first. Yeah. I want to talk about an income tax. I'll shift it to Mike first, and we're going to get the academic view. What makes an income tax the dominant form of taxation today? Where did it come from? And especially we'll talk in a U.S. context, so an historical context. And at the end of it, is it useful for a modern economy we live in today? I'll let you lead off, Mike, and give your thoughts.
Well, okay, so where to begin? The income tax is a big one in the U.S. It's primarily a federal tax in the U.S., although some states do have an income tax, not all of them. My dear state of Massachusetts certainly does. Just about 30 miles north of where I live, New Hampshire does not. So primarily a national tax, a federal tax. Some states have it. Even some cities do, but that's very, very rare. I'm told, I wasn't around back then, but I'm told when the income tax was first put into play, the early 19-teens, I think it was, 1913 or whatever it was, that if you had to pay into the income tax system, it was something to brag about at a cocktail party because it meant you had a very good year. I had to pay income tax. Imagine that. Pause. Imagine that. The rates have varied. I think in the 1950s in the US, the top rate was 90%. But when you started doing all the deductions and exemptions and loopholes and whatever, it got knocked down. It's kind of like at a university, there's the official tuition price, and then there's what a student actually pays, which is never, unless you're very rich, it's never the posted price. I think one of the advantages of an income tax, of course, we're talking a flow, not a wealth tax, which is a tax on a stock of assets. People sometimes confuse them and use the terms interchangeably. Income is not wealth, right? Income is a flow. Is probably ease of collection, because what doesn't happen is that you earn whatever you earn during the year, and on December 31st, you take whatever number your employer says, here's what you earned for the year, and the income tax rate is, pick a number, 20%. So at 0.2 times that number, send that to the government. Now, the three of us, being God-fearing, tax-paying citizens, would have put aside 20% of every paycheck in that scenario and dutifully sent it to the government on December 31st. Most people would not do that. They'd be like, dude, I don't have it. So they have withholding by law that your company has to do, or if you're self-employed, you have to do it. And your income tax return is just here's what we paid in or withheld on your behalf based on you filled out a form, a W-9, I think it's called in the US, that says, here's my guesstimate about how much you should withhold. And then here's what your income tax liability is. And if you didn't withhold enough, you got to pay. And if you withheld too much, you gave the government a loan, an interest-free loan, and you get a refund. So the ease of collection thing, I think, is a big part of it. The ability to be progressive, have different income tax brackets is useful, as opposed to like a sales tax, which just when you go buy your bottle of soda or something at the store, they don't check if you're a poor guy or a rich guy, you need to pay the same 5% sales tax or whatever. So that's a regressive sort of system. So a income tax system can be progressive. The rich guys pay more. So it has a variety of uses that governments find useful. If you're a modern monetary theorist, you say, oh, this is kind of hoochie-coo because the main value of taxes is not to fund the government, but to give value to a fiat currency. So that's a bit of a different argument, I suppose. But that's sort of the traditional public sector economics conversation surrounding income taxes.
Right, and I think so. We'll switch to a transaction tax next, but I want to keep everybody. What Mike pointed out there is that you can tax a flow, an incoming flow into, let's say, your bank account, or you can tax your bank account, and let's say we're being very general or broad with our bank account, and includes your assets too, right? And we're just aggregating it, and you can tax that. You can tax the appreciation of a stock, right? So keep that in mind when we're thinking all of these through, what position that tax lays in, right? Does it come after it accumulates in a stock, or does it come before it accumulates into the stock? And that stock, we're saying, is your bank account, could be a business bank account, et cetera, et cetera. Dave, you have an app. I didn't know you had an app. Well, you mentioned you had an app, but you do have an app, and I saw a bit of the app. And so we're going to show this app, and it's about transaction taxes. But Dave, first, I want you to frame, what is a transaction tax? What does this mean? Tell me.
Oh, let me follow up on Mike's discussion on income tax, because moving to talking about transaction taxes probably needs some context before I get there, but at least a little bit of extra history. The modern idea of income tax actually comes from Britain. It was Pitt the Younger, 1798, war with France. they introduced an income tax, mainly because by then Britain was leading the world in bookkeeping. I mean, Britain is like world champion bookkeepers, and by then they had enough paperwork, enough people earning income that was being measured, like Mike said, that you could capture it, right? So you do have a historical precedent starting here in Britain then, and it worked. That's what happened. It worked so brilliantly that basically the income tax managed to suppress the spending habits of people across the entire population and allowed the government then to buy what was needed for a war with France. And the outcome was very clear. If you look at the history, there was big fluctuations, but the average was about 1% inflation over 20 years of war with France. And in France, by comparison, who they're fighting against, they had massive hyperinflation. So it worked in that sense very well. And a lot of countries, especially Britain, took notice of the fact that income taxes worked. Before Britain did that, there's very little evidence of income taxes in history. And you go back and look at Rome, Egypt as well, that far back, it was cattle or it was grain. It was, you were taxed on things, again, like Mike said, the things that you could see and capture. So we really don't get a modern income tax until you're doing good bookkeeping. But I guess my point about income tax is, apart from the fact that it is actually very modern, and of course we've got very sophisticated economies, and even from an MMT point of view, you need to be taxing the economy, otherwise you will get inflation. You'll just have a valueless currency. The problem, I think, with income tax, and why I'm so for an automated transaction tax, is that you're in effect not encouraging work. What you're doing is taxing the very thing that we want to encourage as if it's a pack of cigarettes. I mean, it's not quite comparable in the UK, where cigarettes are taxed at a very high rate, but in a lot of places it's the same or more than cigarette smoking, which is a sin. It's a sin tax. Why is, so I just want you to think about that, because it doesn't have to be that way. And if we're definitely not funding the government with an income tax, then you have to ask, what is its purpose? And its purpose, just like with the war against France, is to suppress spending of the population. And I don't think that's deliberate, but this is an interpretation that you can see that is actually the effect of what happens. So just that little bit of context before I share this. So I'll go ahead and share, Ty, so it'll take a second to come up, I think. But I've made, it's an app, it's a calculator. And I've made a way that you could look at the basic UK economy figures. It's all very back of envelope. I don't want anybody looking at this and going like, "Oh, but hang on, what about the?" It's back of envelope, and it's an aid to conversation. That's all. But the way that transaction taxes work, and a little bit of extra background, there was a paper by a professor of economics, School of Chicago, actually. So not a woolly lefty, hungered down his open-toed sandals trying to stealth tax everybody. He was actually Milton Friedman student. So he was commissioned by the Bush II administration to look into transaction taxes, to do tax reform. And boy, did he go to town. He was like, right, well, I've got this idea. And the paper was presented to the Bush administration, and they didn't take it up. I'm going to say because I think it would probably work, and you wouldn't be able to avoid tax. But the flip side is that the tax was so small that that for people compared to income tax, it looks so incredibly batshit crazy that I don't think we'll take it up, because we won't believe it's possible, even though it is. So that's what's going on with this calculator. What I wanted to do was put in the UK economy, the transaction tax amount, which is about 200 trillion a year. So about 40 times bigger than the GDP measured economy. So the transaction tax economy is enormous. And that is basically every time you spend or someone buys something off you, of course, that's economic activity. There's no reason not to consider that economic activity. The only thing that might be exceptions, which you might want to introduce maybe, is within your own bank account, for example, things like that. You could make some exceptions for that. But basically, you want to capture as much of the economy as possible. And what I've got on the slider here is sort of defaults to the standard FIGE amount, which was 0.35%. And it gets charged on both sides of every transaction in the economy. And that's the main device. And what I've got down the bottom here is you want to basically, these three rings, you want to line up together in some way as a tool when you're playing with this to know that the ideal outcome is to, balance inflation, balance the budget, or maybe have a small deficit. You might want that. And then to have a not too high overall tax rate, because of course the tax rate, the tax rate has a sweet spot basically on what it does to the economy, because you've got entire supply chains that are going to be affected by it. So if you have this on either side of every transaction, Feige worked out that roughly 0.35 back in the early 2000s would fund the entire federal budget. You would replace every single tax that you have, including income tax, including wealth tax, not wealth tax, inheritance taxes, state taxes, and municipal taxes. And there's an argument perhaps for keeping some of those again, but the point of the exercise was to see how big that economy is and what happens to it. So the other slider that I've got here is to put in a tax-free dividend. And you could set it to 0 and not have it, or you could have it, ridiculous UBI if you want. But the point of it is that a flat tax on its own is incredibly regressive. And so if you don't have a dividend for everybody, and to make sure that the lowest income earners are covered, then it's a regressive system. So that's the main takeaway. But the other thing is to look at what happens to your personal situation with these taxes. So we've got an example here of an individual. They're earning in the UK 36k, about an average salary, and they've got a rent and mortgage and other spending. So it defaults to some sort of ordinary sort of spending habits. And in the current system with income tax, you would have a total of 11,000 roughly over the year, including VAT, to pay. Right. Under the transaction tax system, you would actually, if you've got a dividend, then you've got no tax to pay, and you've only paid £185 annually in transactions that you're making on all of this. And so you can see that suddenly it's shifted from the individual. So who is paying the tax and how it's being done? Well, the tax is not, basically the economy is not simply just people paying income tax, which it's not. It's a big part of the current revenue, as you call it, if you're not MMT, but otherwise it's not. Well, business taxes are a part of it, but even they have, they're going to be paying a lot less overall than the current system as well. But the finance sector, which has a lot of capital moving around, a bit like the Tobin tax, it's going to, depending on what they do, then it's going to get hit more than it would otherwise. And what I would say is we can't build an economy with this system just to protect the stock market. But the stock market would still go on, but what you'd get is a lot less volatile trading, because it wouldn't be ideal to be doing micro trades all the day. So that is where it would come from. But even then, it's manageable, especially if you look at your individual rate. So for day traders, that's just something you have to deal with. But again, you don't make an entire economy for day traders. You make it for people living and working in it day to day. So that is, in a nutshell, what goes on. I'm happy to play with a slider and show you what happens based on my very, very back of envelope calculations. But I thought I'd throw it back to you, Ty. But I'll leave it up on here in case people want to ask, or in the chat want to ask about putting it to different settings, etc.
So actually, yeah, in the chat, please, if you got any specific ideas on how you can modify the settings, this is really cool. I love these kinds of interfaces because they're interactive, and you can play around with them. So if you got any ideas, put them in the chat. I'll minimize this screen now, but I'll be watching in the chat. Dave, maybe just keep it open if it's possible with your computing power.
Sure.
And I'll bring back up the chat. There you guys are.
And
now,
one thing, while people are thinking about things to ask, there is one thing that springs to mind for people pretty instinctively is, well, hang on, what about the supply chain? Because you're adding this tax on every component in the supply chain. And I went and had a deep dive on this because I thought basically you end up with the wrong model in your head for what happens in the supply chain. You end up with an cumulative or exponential thinking, but actually it's linear, because a £900 smartphone, for example, it doesn't work like a snowball where you add a £5 component onto it and then you add that and you add another component onto the 900 and so on. It starts with the 0.35% of £5 and then or 5p or whatever the component is, which is incredibly tiny. And then those all get, added up, but in a linear way. So you actually don't end up with a supply chain, snowball effect of this tax, just to preempt anyone.
So is it like a value-added tax? I'm a little bit unclear.
A value-added tax, Mike, is only on retail. So you're only paying at the very end. This would become part of probably the Bank of International Settlements level. We're talking every transaction would incur a tax, and then you've got to wrangle. There's some, don't get me wrong, there's some engineering here, but you have so you've got to untangle on which side are you taxing when it's an international trade, for example. So the one nation has a transaction tax, well, you're only charging it on one side of that transaction, and so on. So there's those sorts of things that would need to be managed. But yeah.
Did that answer your question, Mike?
Yeah, did that answer the question? I'm sorry.
I'm still trying to process. I've never seen this website, and I'm trying.
No, this is me. I made this calculator just to show you guys.
Oh, you made this? Oh, I'm sorry. Yeah. I didn't pick up on that. Oh. Wow.
I made this because there isn't an effective tool for it, but there needs to be because you want to be able to look at these different systems. And I do need to talk to you, Ty, at some point about whether or not I can tidy up make a back end for it and actually tidy up and put some proper figures in there and see what happens to it dynamically when you play with it.
Yeah, I would say so. Very good. I'll give you an A.
You heard it here first. Where's my diploma?
I would, a nice addition would be to run scenarios where you can compare, an income tax, a sales tax, an excise tax, a value-added tax, a transactions tax for the same scenario, so people could see, kind of compare apples to apples to see, okay, well, if we change things this way versus that way, what would we get?
Yeah, I think that'd be
very interesting. As to,
I've only I think I've at the moment been concentrating on this one because it's hard enough to figure out what stuff you want to see on it. But yeah, the most interesting thing that people have said when they've played with it is, of course, what it does to their personal situation. So I really wanted to make it real world for them across all the systems. But that would be really nice, actually. But yeah, I mean,
100%, because you get into in the U.S. dynamic versus static scoring and the Lucas critique and all that. Whereas, in other words, that if you change, let's say, tax rates, people are going to change their behavior. And static scoring assumes no behavior changes. If you raise the income tax rate or whatever tax, here's the amount of tax revenue more that comes in, higher tax rate. Dynamic scoring says, well, people will change their behavior in response to that. That's the Lucas critique. If you econometrically estimate the parameters of a model, right, those parameters are based on what has previously happened. And if you change a policy, those parameters are no longer any good, right? Because people change their behavior. So that's also an interesting, which tax system would cause less of a disruption and distortion of economic activity, right? Because, one of the criticisms of the income tax, for example, is that the rich guys evade a lot of it because most of their income is unearned, not earned income, which is what is taxed, right? They get it from dividends and what have you. So, if I'm a richer guy, I'm going to jiggle things or have my accountants jiggle things so I can evade as much of the taxes as I can, right? I'll respond to changes in the tax system. So, and then you get into regressivity and all that stuff as well. So there's a lot of issues related to taxes that
one of the things that
the best way to do it.
One of the things you could, obviously this is not modeling, this is much more just whether or not this human behavior would play out on a scale. But you could see very quickly that if there's a country that has this system in place, there's no point in moving money to an offshore to avoid tax, because you're going to get a transaction tax on that money as it leaves. So what are you evading? You may as well leave it in the country. And so that's one of the benefits of it. The aim is not with this one to punish the wealthy per se. And I think we're going to talk about the wealth tax, and we'll come on to that, which is, most people assume that that's what we need to do. I mean, fine, but what you need is a tax system that is not evadable. And this one's so small, the transaction amounts are so small, even for the wealthy, that it's not bother. You won't bother with missing it compared to parking your money elsewhere. So it should attract a lot of money into the country. And the tax-free dividend is the only thing that you need to wrangle in terms of like what distortion that really does to the economy, because the transaction tax would distort the economy in that you would have lots more money personally already. So you could potentially set it very low to start with, or nothing at all. It would be regressive, but people have got income tax at such a negligible level that they've got money to spend anyway. Unless every employer then adjusts and goes, well, we're going to pay you less. I don't know, but that could happen too.
Okay, so I'm slightly convinced here. Can I move my frickin' camera over? Can I just come over here? Thank you. Talking to my mouse.
I think you should make out there's a whole full production crew in the background there. They're like,
you know what?
Listen, Shona, can you go to this slide? No, not that. That's brilliant.
So I like it. I get what you're saying. I'm emotionally irritated because you knock day traders.
That's what I was gonna say. Yeah,
I was totally picking on day traders there.
Speculators out of the markets.
Yeah. But if the transaction cost is so low, and I'm returning a dividend, and essentially what you're saying in here is that nobody can really escape this tax in a country if they're using the currency in their transaction. And most of our transactions are digital now, so this tax will capture them. That because more people are paying the tax, the bottom end of the spectrum, it can be so low that even a transaction tax for the smallest people in the economy, it's small enough to handle. And even us day traders, our low end day traders like me, that are certainly not rich, won't be affected too much. So I'm on board, and so I don't have any.
I count that as a win, because you weren't before. Our audience won't know, but beforehand your instinct was not, which is interesting.
There's two parts to it, and this is where I always try to educate people that there's the mechanical part of a sound system, and then there's the political part of it, right? And I'm trying not to go down because it's a different route, and you would agree, okay, yeah, there are political issues to trying to convince the public that this is a good idea. Because at face value, when you first said it to me pre-show, I'm thinking, what? You want to tax everything I do with my debit card? I said, what? I lost it. I snapped. Yeah, that's
you
Captain.
did.
Yeah. And so you scale that up to the political level, and you see the resistance. But I want to stay out of that because I'm looking at the mechanical aspects that you presented nicely with your great job on the app, by the way.
That was awesome. Yeah,
really like it. So. Listen, I'm going to think about it. We're going to cover other taxes, but this was.
Oh, and by the way, Steve and Phil have done an episode on this a few months ago now, but they have covered this as well. So they did a deep dive on it, and in the end, Steve was pretty lukewarm about it. It wasn't unenthusiastic about it, but the main hurdle, from my understanding from podcast, was it's political. It would never be possible and I think this is the real hurdle, because it's unavoidable, and for the top end of town that is a no-go, and they would lobby to stop that, but I think that just makes me like it more. So that's where I am on the transaction tax.
You're a true rebel, Dave.
I'm a true believer.
Yeah, and so that's where any of my problems would be, is on the political end of things, but I'm listening mechanically. It's something to think about. And so I'll think about that one, but we got to keep covering other forms of taxes. And I think we kind of touched on it. And let's talk about a wealth tax. And again, I'll get Mike's academic Now, keep in mind, Mike is a working academic. He builds wood things, so he's not just your, office economist. He is a working man's economist. I'll get his opinion. Mike, wealth tax, compare it, nuance it with an income tax, maybe even nuance it with the transaction tax we just talked about. Give your opinions, and then I'll go to Dave after that.
All right. So again, there's with the whole issue of taxation and how to do it and the pros and cons of every different kind of tax system. It's almost endless, right? We call it public sector economics. Who bears the burden of taxes? The whole 9 yards. So it's that we can't really do a comprehensive summary and comparison here today. But off the top of my head, you were right earlier, Ty, when you mentioned that a wealth tax is a tax on a stock, not a flow, as an income tax is. So a wealth tax, you have to sort of freeze time, and because the stock represents the state of a system at any given point in time. So you have to almost say, we're going to stop the movie and look at whatever's in that bathtub, or the dollar or British pound value, the currency value of whatever's in that stock, that bathtub, at the end of the year, the end of the fiscal year, the end of the quarter, the end of the month, whenever you're doing it. And of course, if those stocks are filled with assets whose prices change a lot, let's say equities, minute by minute, your portfolio is going up and down. 10 seconds ago, you might have had a bigger tax bill than you did at 11:59 on December 31st. So getting a handle on how to do that, a wealth tax, it's difficult. It's much more difficult than the income tax that we described earlier. Obviously, if you imposed a wealth tax on an economy, the people who have said, "Hey, I'm going to get unearned income through my stock portfolio, which is my wealth, which is taxed at a lower rate than I would if I was earning the same amount of income." They're going to rearrange everything they're doing, right, in light of a wealth tax system. So it's a little harder to implement. And when do you measure the wealth? How do I measure the wealth of my house? Let's say I own my home, which you can see behind me. What's it worth? Well, if I sell it for $500,000, that's what it's worth. How do I know that? Somebody bought it for $500,000. But if I'm not selling it, how do you know? So now we're getting into algorithms. How many bathrooms do I have? How many bedrooms? Do I have an attached garage? All that sort of stuff. And you can debate that, so it's fraught with difficulties, right? Again, comparing it to other tax systems, it's likely to be more progressive, because it's the rich guys who have wealth to tax. And then you get into, well, do you want to take a real rich guy and who's maybe created a bunch of businesses that are employing people who are paying taxes, and consumers who are buying stuff that they like, and punish that person for doing that, in a sense, punish them with taxes, disincentivizing that person doing more of that activity, or someone else from imitating that person in a different industry or something, versus you get into the sort of sinister stuff where the really rich guys go to the politicians and they huddle up somewhere over a steak dinner and decide what's going to happen, right? It's not really free market capitalism, but the rich guys can, make donations and fund election poster, the whole nine. So it has impacts on both of those sorts of, good stuff and bad stuff, economically and politically speaking. Final point, I guess I would say, is that I don't think it's very possible without a giant crisis to change any of our tax systems, certainly not in the US, because they're path dependent. They're locked in. There are so many special interests that have their fingers in the pie. You know, you want to go to a flat tax and get rid of the traditional income tax. Well, all the people who get to deduct their home mortgage interest are going to be pissed. The mortgage people, which are the banks, are going to be pissed, and their lobbyists are going to go to town. And that's just one of many examples, right? So to change any of these systems, I think, is near impossible without a world war or a meteor coming to hit the earth or some crazy crisis. But
I think I'll stick with income tax rather than have the world war if I have to.
Yeah, if you had a choice, right? Dave's very smart. Last point, though, is any of these systems that is deemed a good idea, what the politicians will do is add it to the other taxes.
Yeah.
They won't replace the system. I
think you're right. That would become a tyranny. You're right, with transaction taxes in particular. Yeah, I agree.
So I'll go to you, Dave, now, but I want you to, discuss what you just heard Mike say about wealth tax and compare it, nuance it with the benefits that you would see with a transaction tax opposed to wealth tax.
Sure.
Kind of frame it in that way.
Well, the wealth tax is the hardest one to disentangle from the politics of it, because implementing it is so fraught with difficulties. But let's assume you get past all of that, and so officially there's a wealth tax and it's in place. The first thing that happens is the wealthy then work out some other new loophole. And I'm going to say they're very good at this. And I'll give you a cultural example of what I mean, because it's a big problem. You can't talk about wealth tax without talking about this. It's a well-known cultural phenomenon. It's called tax efficiency. It's not tax evasion. It's legal avoidance of tax. My mum-in-law, when my wife's my stepdad died, the first question she was asked when she was doing estate planning was, how do you feel about paying tax? Literally that brazen. That was the first question. And the reason for that is not because they're doing anything dodgy or illegal. That is the law. They need to minimize the taxes, right? And so that's not just a cultural problem. That's a legal problem. It's beyond, even if you implement a wealth tax, that's the first thing that happens. And so then the wealth tax becomes pretty much like trying to eat, jelly, I think you call it in America, but I call it, or Jello, trying to eat Jello with chopsticks. It's just going to, do you know what I mean? That's what it becomes like. So I think it's impossible to not acknowledge that is a very likely outcome. But aside from that, what you want really is to get people on board with paying for it and why. Now, I think the only historical precedent we've got for wealth taxes would be when people were locking up money in World War II in bonds. And we talked about this last week. I think that's a fair comparison. If you could culturally get the wealthy to see that we really need to build something new that might benefit them in the long run, then you could do it. But I really think the aim, which is usually to just punish the wealthy, because inequality is crazy, it definitely is not on its own a good stance to have. So yeah, that's what I struggle with the whole thing. But let's say you implement it. What would be the effects, apart from everybody sliding off it and trying to avoid it, so you'd have less tax to claim in the first place? It doesn't actually fund anything, and I'm with the MMTers on this. Gary is a really passionate speaker on this, and he sticks up for the poorest, and I applaud him for that. But he's dead fucking wrong on the fact that we need to wait around and argue about taxing the wealthy before we do anything, and that is a real problem, because we'll be waiting till kingdom come to get a wealth tax in place. That's the practical reality of it that I don't agree with. So it's the argument that can we please ask the wealthy to do some infrastructure spending? That's just, you just on hiding to nothing right from the start. So that's the problem I have with it. As opposed to the transaction tax, I've spoken with activists in the US. I should remember the main guy I spoke to. I should dig that out, but it was a while ago. But basically, he's been speaking to wealthy benefactors of his, because he's trying to get more traction over there with the transaction tax talk, and he's finding that the wealthy love it. And you'd think automatically that that's bad, but actually, if you implement it with a dividend, then it isn't regressive. But they love it because it is spread out. It really is a question of many hands light work, and for once, it's a tax that takes the burden off the lowest incomes at the same time. But it does, in real terms, cost more for the wealthy. They do pay more because they're doing more and larger transactions, of course, but it is flat to them. And so they see it as a net positive. So if you want one that's going to get positive support from across the board, then the transaction tax wins, but you must force a dividend option in there. You don't have to have the slider on in policy terms, but you need to exist so that you could turn it on. Otherwise, you're just basically setting yourself up for you're just setting yourself up for the wealthy to just ride off with a very almost tax-free situation, because it's a very low tax for them. So that's my comparison.
Perfect. Thank you, Dave. Go ahead, Mike.
I just wanted to add a couple. Thank you. I just wanted to add a couple other points here on this issue of taxation in general. I guess, we can argue at the sovereign nation with the sovereign fiat currency level whether or not taxes actually fund the government, right? But certainly at lower level, or a nation that doesn't have a sovereign fiat currency, or lower levels, provinces, states, cities, counties, and what have you, certainly do, have to go get revenues so that they can do public.
States and counties do. You're right. It's the same here in the UK. You're right.
Yeah. So, but having said that, taxes, even the modern monetary theorists regularly say that in addition to giving value to a fiat currency, taxes have a lot of other useful uses that are useful. For example, a sin tax on alcohol and tobacco can disincentivize the use of those products. Taxes, an excise tax on gasoline, if it's used for highway repairs and construction, the people who use the highways, hence use the gasoline, are paying for the highway construction and repairs and what have you. I think a Tobin tax was mentioned before, and the idea of using a Tobin tax, or possibly a transactions tax, I haven't really thought about it, to stabilize markets. So you get the speculators a little bit out of these markets, right? And just the hedgers, the people who actually want the underlying asset, rather than just housing flippers and stock flippers and Bitcoin flippers and whatever out, because particularly, sorry, Ty, but the scalpers and the short-term traders, they work on they make their money. They don't make their money by one $100 trade. They make their money on 100 $1 trades, right? And if you tax that $1 away or make it only 20 cents, it really adds the speculation and stabilizes the market to some degree. So taxes can have a lot of other. They're a tool that has other uses besides funding the government. And again, it does fund cities, counties, provinces, and states and what have you. And it depends if you want to get into the argument whether it funds national governments or not. Anyway, I just want to make that point.
Yeah, it's fine. And I wasn't making an argument that you don't need tax at all, of course. We covered that in the beginning. But the wealth tax, if we're waiting for that as revenue only, then I think we do. We kneecap ourselves. We're not allowed to have a conversation without getting all of the wealthy to agree to that wealth tax first. And I think that seems like a shame. You could definitely tax them after, and might have to find ways of doing that. Like you say, there might be sin taxes on mega yachts or something like that. I don't know, Mike. But but the sin taxes is definitely an argument for keeping those even under a transaction tax, for example. But anyway, I totally agree with you. Which is boring. We need disagreement, but I agree.
I think it's also it's also important to remember, again, from a political side, the conversation about what type of tax is also going to be very dependent on what kind of service the government is delivering, right? So if Mike kind of touched on it there with the sin taxes, if there's a gas tax, people are using the roadways. The roadways have to be really efficient, paved really well, and so there's the political argument there. If you're going to look at different tax systems, you have to look at the services being delivered that are correlated to those tax systems. Now, whether it's a general fund, as we all know it is, there has to be some tying of, okay, this is a really good tax system because it delivers this type of service. I think that's an important topic as well to think about when we get into the political realms of, is it feasible politically to convince the public that this type of tax system is better than another type of tax system. I want to move on to another tax system because we want to try to get through them as many as we can. And this is more like a sales consumption tax. And Pet Rock brought up a question. Pet Rock, he's on X. Thanks for everybody watching on X. I appreciate it. Any opinions on Robert Frank's proposal of a PCT, which is a progressive consumption tax? So I had to look up. I don't know who the hell Robert Franks is. Robert Frank's consumption tax proposal involves replacing the progressive income tax system, where individuals pay taxes on what they consume, not what they earn. Now, this is similar to, the transaction tax, but it's in a lot limited scope. And what we have a form of it here in Canada, both provincially and federally, we have what's called a GST, which is a general, sales tax. And then we have PST, which is a provincial's sales tax. So we have a form of it. Maybe just give you your guys' opinion on a consumption sales tax. And there might be a nuance there between the two. But I'll start with Dave here because this is Dave's wheelhouse. I realize, guys, this is Dave's specialty. I can tell as he's talking. This is his. Yeah, this is like, whoa. This guy knows what he's talking about. So, Dave, tell me about sales taxes, consumption taxes, your thoughts on it, and maybe you want to relate that back to the transaction tax. That's up to you.
Yeah, no, that's fine. I think. It's for me, this sort of conversation is a step in the right direction anyway. So a consumption tax starts to move things off what is effectively discouraging the thing we want to encourage and putting it onto the places in the economy where we want to say, do you know what? You're demanding resources at the point of use here, which is what I think the transaction tax does very broadly, like it does the entire economy. But at least the consumption tax idea is saying, look, if you want a coffee, well, then you're going to ask a barista to make it for you. You've got to get this coffee in from abroad, etc. So you're going to be taxed at that point because you're demanding something for that money. And it's the same with a mega yacht. You could have a transaction tax on that. A consumption tax on that. And one of the, at least in my head, the modeling goes, and you guys can correct me here, but with a mega yacht, if you are taxing that at a higher rate, then what you're doing is effectively discouraging a lot of that expertise so that it goes back out into the economy and is used elsewhere. Because at the moment, what you have is, if you're super wealthy, you effectively, you aren't infected by any inflation. So you can just go and buy a mega yacht. It doesn't affect you in the same way as buying a large purchase does if you're living on a small scale. So therefore, we get resources, talent, all sorts of specialty skills pulled out into I'm picking on mega yachts, into building, say, mega yachts. But actually what would happen with a higher consumption tax on that is, well, suddenly it's a bit expensive. You might not get as many built. And you might dissipate some of that expertise into other uses in the economy, which aren't necessarily for the super wealthy. So I think looking at it from that point of view, you're changing the paradigm if you're disincentivizing consumption at scale. And I think that's a good thing. I mean, as long as you're not making it expensive for people to buy food, for example, and get the basics, well, then I think a consumption tax on its own can work. But it's going to be a lot bigger, and you're going to notice it more than a transaction tax is all I would say. Because again, the transaction tax is meant to be tiny. It's meant to be like, who cares about avoiding it? But with the consumption tax, you start to run into the moral hazard, which is, well, I'm going to make this other purchase, which at some in some places you want that, but maybe you'd probably have to think both politically and systems on level what really happens, because I think you'll distort the economy much more, which is maybe what you want, but that's what'll happen.
Yeah, and so there is more. I encourage everybody to go look at Robert Frank's proposal. It is progressive, so I think I haven't looked at it myself, but I think there are some scenarios in there where the poor wouldn't get taxed as much. I'm not too sure how that would work out, but it's worth everybody taking a second look. Mike, basically the same question. What's your thoughts on a consumption tax?
Yeah, so Robert Frank, I believe, is an economist at Cornell. I don't know if he originated this idea or not, but I know he's behind it. And I haven't looked into it a lot. I've read a little bit about it in the past. My question would be how mechanically you pull it off. But basically what you do when it's tax time, kind of like we do now, and at least in the U.S. when it's income tax season, you would get a statement from your company, whether it's you own your own company, self-owned business, or from the company you work for. Here's what your income was. And then you'd get a statement, presumably from your bank or banks. Here's what your savings is, or saving, the flow, I guess you'd say. And the difference between the two is what must be what you consumed or spent on stuff. So instead of taxing income, the flow into the stock of wealth, if you would, it's taxing the outflow, or what you're drawing, as Dave said, what you're drawing out of the economy rather than what you're putting into the economy, to the extent that taxes disincentivize things and subsidies incentivize things. You're disincentivizing consumption and you're incentivizing saving. And of course, it can be progressive when you would make that calculation. The guys or gals with the bigger number, bigger consumption would pay a higher income tax rate and so forth. So it's progressive. If I'm a Keynesian, if I wear my Keynesian hat, not a Keynesian, a Keynesian, I would say, wait a minute, what did we learn from the general theory, right? That if you save more, good for you. If I save more, good for me. If we all save more, because now there's a consumption tax disincentivizing spending on stuff and incentivizing saving, we throw the economy, ceteris paribus, into a recession. So this requires modeling to think through the implications if this were to go into effect. I'm going to guess Robert Frank is more of the loanable funds, Austrian kind of school, where more saving is good, it leads to more investment and what have you. I could be wrong. I don't know that much about it. And I'm wondering, mechanically, exactly, because banks send you a 1099 in the United States every year at tax time. Your employer sends you a W-2, or if you worked as a subcontractor for a company at 1099, they also send copies to the government. So there's already this kind of paperwork going on. So I'm guessing mechanically implementing a consumption tax is much easier than, let's say, a wealth tax to implement.
Right. Perfect. Let's keep going on here, and let's talk about a resource rent tax. So this is going to this is going to appease the ecological types out there, the people that care about the environment to a degree. And actually, Reagan Boychuk brought it up, and he says, resource rent tax, would it work? Is it unjust, et cetera, et cetera? I want to get your thoughts on that. And this is a little more technical, right? So it's a tax on surplus value or rent generated by the exploitation of natural resources. And so there is some overlap with some of the other taxes we talked about. Mike, I'll start with you. What's your thoughts on that? And maybe the impacts of production? Because ultimately, we are a production-centric type society, and the most important part in all the feedback loops, Mike, is what we can actually generate from the stock of real capital we have. What kind of output, goods and services, can we generate? And this kind of goes in that direction of taxing that very core proposition of creating value by extracting or taxing natural resources that we need to create that production. Your thoughts, Mike?
Yeah, so there's a whole line of thinking going back to the earliest days of modern economics. The physiocrats, Steve Keynes likes to mention that, Keynes and what have you, and even old Adam Smith and David Ricardo and Thomas Malthus. They were the first people to kind of think about the different classes in the system. You had the workers, the capitalists, and the landowners, or the aristocrats, right? And the workers and the capitalists fought over the profits, and the capitalists kept the workers alive. They had to pay them something, right? A subsistence wage was often assumed, and the profits would go to the capitalists, except they had to pay rent to the landlords, the aristocrats, and over time, due to competition, the profits would go away. The workers were screwed as well, and the aristocrats would get everything, and they would spend it on riotous living, I believe. One of them, Adam Smith, or one of them said. So it's an old idea that whoever owns the land really, at core, runs the show. Now, today, modern times, modern macro is more on the economics of ideas rather than the lands, and you have increasing returns rather than decreasing returns, meaning in the old days, when the land was the big thing to generate stuff, production of goods and services, and could be taxed, you had diminishing marginal productivity because you used the best land first, and then the next best land, and the next best land. And in England, where they thought of this first, you pretty much hit the water's edge, and that was that, right? Whereas, with ideas that can be used by more than one person at a time, and whatever, you get increasing. So the economic theory has gone away from this sort of thing. But yeah, if you were to tax land and resource extraction, you start getting a little bit into a value-added tax, or maybe an excise tax. I guess an excise tax is more at the source. Would it dampen resource extraction? Would it punish those who own land? Yes, I guess. I haven't thought about it in great detail. Final point, I guess I would say, is I grew up in Wisconsin, and a lot of my high school classmates were dairy farmers who grew up on family farms. They were landowners, but they were not rich guys. So I don't think it would have gone over really well with my families of my high school classmates.
Dave, what's your thoughts?
So I'm gonna plead some ignorance on here at exactly what the resource tax is aimed at covering, but assume that you're doing it for ecological reasons. You want to minimize, say, extraction, or you want to minimize extraction specifically of fossil fuels, and therefore reduce CO2 emissions. Just doing that on its own without increasing energy sources elsewhere, of course you have to take into account that you're going to, unless you're a degrowther, you're going to impact energy production. I would have thought you would, to some degree. I guess it depends on how high the thing is. And again, what is the aim of the tax? Is it being thought of as revenue for somewhere else? And is that meant to go somewhere? I'm not sure. So I don't know enough about it, I'll admit. But I will say that, so anecdotally, the closest thing that I've seen to a resource tax was over in Australia. It would have been like 2007, 2008. There was an attempt to put a super profits tax on Western Australian mining companies, because they were just going through a time of being able to ship basically as much coal as they could get out of the ground off to China. And so it wasn't a resources tax exactly, but what they were saying was, we're going to disincentivize this. There's an enormous amount of pollution that you're committing, even if it's not in Australia, it's being burnt in China. And we want some of, basically they have a revenue thinking when they were doing it as well, which was, we're going to take some of this revenue and redistribute it outside of Western Australia. Well, the reaction to that was that within about six weeks, the Prime Minister was out of power, So, and that was a campaign by those mining companies, because they have a lot of money, to basically get rid of him. And because he became so unpopular, he was forced to step down. So have a look at who you're aiming the resource tax at. It's a very big and real political problem to get the stuff enacted. I'm not saying that you should just put your hands up in defeat and say you can't, but that one's curly. And I think, unless I'm wrong in terms of how big it is, I think you have very real constraints on how much you want to reduce energy production by, but I don't know. I mean, obviously I'm in favor of it, but I'm much more in favor of, say, using the money, as it were, if that's going to be what it's for, to ramp up renewables elsewhere. Because otherwise what you're doing is just basically saying, let's all just have less energy and therefore more expensive energy prices and products. So that's
Let me pick up on what Dave is saying. I think he's spot on. I think, as Dave correctly said, it depends on what are you trying to do with the tax. If you're looking for the easiest way to raise a lot of revenue, it's probably not the best way to do it. It might be you have to do some modeling and whatever. But if the intention is to reduce the extraction of natural resources from the land because we're running out of them, or it's creating pollution, or whatever the case may be, that's quite a different matter. That takes us into the area of spillover benefits and spillover costs, right? If the market price of your product, let's say, does not include the cost of the pollution that you're spewing out of your smokestack and it's floating over to somebody's house or a different state or whatever, then the government should, come in and tax you for that, and then do some remediation, or at least have the purchases of your product pay the full cost of what the product is, right? And vice versa. It should subsidize education and whatever if there's spillover goodness that happens. So using taxes for incentivizing and disincentivizing things, as opposed to worrying about revenue raising, it seems to me that is probably what that sort of tax would excel at.
There's a comment there from Reagan, which I think we should address. I think it's a very good point, because it's raising that if you don't pay for it, you don't own it. You don't have rights to it. And I think that then gets into what the tax is actually for. And if the aim is to either discourage or to have some recognition of who actually owns the land that's being, say, exploited for energy or something like that, I think that's a fair point. And then, but that's again, Mike, what you're talking about is, what is it for? And if that's a valid reason for the tax, whether we can get it through, one can get it through, I don't know, but yeah. Hey, I can see there's some comments of, well, why have we talked about LVT, land value tax? Some people champing at the bit there.
Yeah. Let's that's kind of, I was saving that for last, and we kind of are at the last one. So let's, I hate it when I can't move my big face into the big block like that. Let's talk about the land value tax, commonly referred to as acronym LVT. Let's talk about that. And again, the more we do these different types of tax systems, the more overlap we're seeing with other tax systems we've discussed. So we might be going over some of the same things, but I think it's important for our viewers that joined in after the start to hear them again anyway. So I'll start with Mike. Your thoughts on a land value tax?
That one, I must confess, I'm not really up on the ins and outs of it. So all I can really say off the top of my head is that as soon as you're wondering about what the value of something is, so that you can tax it or even sell it or whatever, if you have sold it, it's worth what somebody paid you for it. There's a very hard number there that you can use. If it hasn't been sold, well, what's it worth? Now you're getting into subjective measures, algorithms, linear regressions, and what have you. And I suppose maybe there's a political process that says we all agree on here's how we do it. But yeah, I mean, it's one of the big resources, right? Land, labor, capital, right? So if if you're a large landowner, you control a lot of resources, right? And if you're going to tax that, you got to find a way to assess the value.
So I know, Dave, you're chomping at the bit here. It seems like you're going to have some knowledge on a land value tax. So, Dave, just roll it out, start spewing, let it out. Just let it out of your soul.
No, I think I need to. I feel like I do need to be an expert in LVT because it is. There's a very, large like audience for it. A lot of people are really convinced of it. So I want to bone up on it. So already apologies to Georgists listening to this. I'm going to completely butcher the whole concept, I'm afraid. Quick one. Tony's saying I'm wrong about mineral tax. That's fine. I mean, I literally, the mineral tax is very curly. I don't pretend to understand it. I was trying to get at the cultural issues, but or cultural and political issues. But so LVT seems to be a way to remove the incentive overall in the economy for owning land. Like, just how do we demote it? And if we can demote it, then people can actually live. Because one of the things is, like Mike hinted at, you're not making any more land. It's a finite stock, and people have to live somewhere. So if there is a tool that could bring down the ratio, make it less desirable to own the land in the first place, then I think we could change quite a lot. Because it seems ridiculous to me that you're able to just basically, anybody is able to ratchet up or price out, the next generation and the next generation from living here. It makes no sense. So that, to me, instinctively, is the most desirable thing about the land value tax. And I don't know if the intention is to replace all other taxes or not, and if that matters. But yeah, I mean, there's so much stock that when you look at the value of land, it wouldn't surprise me if it is able to replace everything else. But then what happens when you implement it over time, because land values reduce? Don't you then end up with less land value to tax? So that's a curly one, but that might not happen for a generation or so. So that's probably the extent of my knowledge. I think I'm definitely getting out of my depth really quickly on it, but I am curious about it. I just haven't got around to really boning up on it. So apologies.
Yeah, I think there's, if I just chime in one other thing, I think there's an element of the landowners over time, if the value of their land increases due to population density, or you discover minerals underneath it you didn't know were there, what have you, they become wealthier, but they didn't do anything to earn it, right? That they just happen to, be there and own that land. And that's in some sense deemed wrong or unfair, or something like, dude, you didn't do nothing and now you're a rich guy, right? So I think there's an element of that as well in this sort of Henry George-ish idea.
Yeah.
Perfect. Everybody, thanks for tuning in. Make sure you hit that like button, hit the subscribe button, hit the notification bell. The thing is underneath. I screwed it up. Hold on. Let's move that. And now hit that like button, subscribe button, comment button, comment underneath the video. I'm trying to manipulate the algorithm like the government manipulates you with taxes. We've got a question from one of my paid Patreon members, so we'll get to it. Zoe Lindsay, how you doing, Zoe? I'm glad you're here. Has a question. The optimal tax approach must depend on the goal of taxation. What do you think the goal should be? Would being totally apolitical mean should tax be abolished altogether? And I want to get both Mike and Dave's opinion. And I'm thinking about a topic we can touch on in a bit is, what is the ultimate purpose for taxes? And I think about things like Gary Stevenson and the inequality in society, but we can get to that in a bit. But specifically to Zoe's question, Mike, do you have a comment you can make for her?
Yeah, optimal. I get the intent of the question, and then you get into objective functions and all sorts of Powell algorithms to optimize something. But I guess the first thing I would say with respect to the question is, what should the size of the public sector be in any given society, right? And then once you sort of determine that, you can start talking about ways to get there, right? Including different forms of taxation and what have you. So, you can get into issues like, do I want the government to pick up my trash, or am I going to hire a private company to do that? Do I want to have a private school system or public schools? Is my judicial system large enough to handle court cases, or I don't mind waiting 5 months to have my civil court issue heard? Is our military large enough to defend the country, or defend our national interests elsewhere? What have you? You get into all this stuff. So what should the size of the public sector be? And that is determined by some sort of political process, as we know. Whether it's, it could be a dictatorship all the way to a pure democracy, a representative republic, a parliament, whatever. And so somehow the political machinations happen, hopefully representing more or less the will of the people, what they would like to see the size of the public sector be, that it's in some sense optimal, not necessarily mathematically optimal, but about as close as you can get. And then, then you start to ask, okay, how can we get there? How do we move those resources from the private sector? What sort of tax system would do that fairly, and what have you? Last point is Kenneth Arrow, Nobel Prize winner in economics, famously came up with Arrow's impossibility theorem, where he kind of showed that it's impossible to make a social welfare function that kind of smears together everybody's personal utility function or personal desires into an accurate aggregate desire for whatever goods and services or what have you. So that gets you into the whole issue of voting methods and what have you, and political economy and political science. And sadly, there's no one good way to do that, to ascertain accurately what the will of the people is. So we muddle along and try and do that. So I don't think optimal is possible, but maybe good enough is as good as society can do.
Dave, do you got anything to add on to Zoe's comment and question there?
There would be so I'm very much with the MMTers in the fact that the tax is a public monopoly on money. That bit makes perfect sense to me. And once you see that, then the purpose of it is to maintain that money supply as a fiat currency. Its primary purpose is to be useful, of course, so that you can use it within your national borders, and you have control of the means of buying and selling resources, etc. So and especially for the government to be able to actually do things in the public name. So I think that should be what tax is for, and you've got to remember that is the basic thing. That is the basic goal, is to maintain a currency. I think after that, then you get into, well, there's things I want to do with it, or we want the government to do this, we want the private sector to do that, and that's where you get into the wrangling over and the horse trading over which parts should be taxed or not. And then, of course, in a mixed economy, you have to have those debates. Even the transaction tax is an imperfect system, even though I've been touting it as if it's perfect. There are, I don't think, any perfect systems, and I think you're probably going to end up with a broad system like you've got, say, income and corporate tax doing most of the heavy lifting in modern economies at the moment. But there's a whole bunch of other taxes like just added on, which I think is actually one of the big problems. It's become so Byzantine that people are fed up with it. And of course they want to evade because it's just unreasonable and intrusive. So for me, it should be the optimal tax, at the least, is the one with the least friction that has the most support. I mean, if you've got that, then you can do loads. If you haven't got that, which I think is what's happening at the moment, when people are just pissed off with it generally, right across the board, well, then I don't think you've got an optimal tax. So if I say optimal, it's one that broadly people don't want to evade, and I think that should be a way to look at tax.
Very good. Thank you. There you go, Zoe. I got you a prime spot in the Q&A there.
Prime time.
You can get that prime spot if you become one of my Patreon members for as low as $4.99 a month. Can you believe that? Rock bottom prices. I'm adding value to the economy every day through my Patreon. Bob Lior, you've been with us for years now, whether it was on the Steve Keen channel or my channel. Owning land is still okay, but no one has the right to claim economic rent is generated by the community. That's what the single tax targets, as Mike said. Great comment. I agree. Lars, great show today. Thank you. I didn't do anything.
That as a comment?
Yeah, this is all Mike and Dave today. I've just yapped in between because you know what? When I look at taxes, I look at it for one value at this point in time because I take up a lot of the modern monetary theory view on it. I'm not quite a neo-chartalist per se, so the whole part about adding value to the currency, it's a component of demand for the currency, but I take a more broader post-Keynesian view on the price level of a currency or the value of the currency, and that goes into aggregate demand and a lot of other things. But for the sense that taxes don't fund the federal government in the traditional sense of in the financial way, although we can agree that taxes, like Dave was mentioning earlier, create fiscal space. So people aren't consuming as much. There's more resources, idle resources in the private sector for the government to employ. We can think about the war bonds in World War II. I look at it, what could be the main purpose for taxation? And I think about inequality. So I want to talk about that next. And it kind of touches on what we touched on with Gary Stevenson. And obviously, Dave, you have some critiques about that. But let's talk about taxes addressing inequality. Is there a specific tax system that could really target that? Or is there no tax system at all? Ty, you're crazy. You're not going to solve inequality through a tax system. It's something else. Let me know. I'll start with you, Dave. What's your thoughts on a specific tax system or all of them contributing to helping solve inequality or not?
I'm at risk of making this the transaction tax show, but that is the bit that I was trying to get across. The only, if you tinker around with income tax, the system that we've got now, what you could do is, unfortunately, in this country, because it's not politically someone I agree with, but the only person that is talking about solving a lot of the problems for the lowest incomes is Nigel Farage. Like it's ridiculous to me that that centre-left parties have not nicked his main signature policy, other than all the immigration stuff, which gets all the headlines, which is that he wants to increase the tax threshold. So when you earn money up to £20,000, you're not going to pay a penny in tax. So if you want to just target inequality, we don't need to really change much. We need to change the tax code where in countries that are using income tax, and just say, right, basically, you're going to earn tons of money before you start paying tax, because as we know from M&T standpoint, we've talked about this a bit, and as I was trying to explain with transaction tax, it's just not where the revenue has to come from. You're not trying to collect the money and then spend it. What you are trying to do is reduce pressure on the economy in certain places, so you make sure that you've got an income tax that's population-wide to reduce demand, which is what happened, which is why historically Britain did much better in the wars against France and Napoleonic Wars. So as I was saying earlier, so that's why I would think you don't need to change an enormous amount to deal with inequality, but of course you've still got the problem of people who aren't working, or are still earning very little. Even if they're not getting taxed on it, they're still earning very little. And so that's where that's where that's not a tax thing. Then I think you've got to then consider using the power of the currency that you've created with the tax mechanism to either take up arms with the MMTers and say, let's work out how a job guarantee would work. Although it's very hard to get them to pin them down on the practicals. It's very difficult to know exactly how that would work in practice. But I'm sympathetic to the idea. And then there's UBI, which is just flat out just handouts to solve inequality. But I know that the UBI is also imperfect, so I'm not going to pretend that, but it's also not a tax answer. So I'm trying to pick the ones that seem the most obvious to me. There might be an LVT one that I'm missing, but that seems the simplest thing is just raise the tax threshold massively for income tax.
Mike, your thoughts on using taxation, whatever form you prefer, on addressing inequality in our Western societies that we are seeing. Is that a viable path going forward, or is Ty and Gary Stevenson and a whole lot of other people just nuts? And you can say that if you want. I won't be offended, but your thoughts.
Yeah. Well, as soon as you start talking about income and wealth inequality, either within a given society or among different nations and what have you, that's a larger question than simply a tax question. You kind of have two schools of thought, sort of the biological inequality argument, which is there's a bell curve of talents and motivations that people are born with. Those who are highly talented / highly motivated make a lot of money, do very well, and the folks on the other end of the spectrum not so much. Versus it's an institutional issue that institutions create inequality and promote it and keep it. The people who have it retain it and pass the wealth on to their children and what have you, and keep those who don't have it from having it. Also, income inequality is a dynamic system. You have poor guys getting rich and rich guys getting poor and what have you. So it's a moving, it's a moving target as well. So so what are you going to do? There's a lot going on here. I do know that if you go to historically, I haven't been the last couple of years, but when I'd go to the American Economic Association meetings, there's very few sessions that are standing room only. But the Nobel laureates giving a speech, that's standing room only. There's a few of them, the Richard T. Ely lecturers, but Thomas Piketty, when he came on the scene with his work on income inequality, got a lot of attention. Of course, he says he believes it's an institutional problem. It's not a sort of a biological, inevitable problem. And it's sort of path dependent. The rich get richer and the poor get children, that sort of argument. So he does advocate for lots of income and wealth redistribution within a society and among nations. Then you get into, well, okay, if we buy that, how are you going to go about doing that? Now we get into taxation and what have you. And, breaking sort of rich family monopolies, the Rothschilds, whatever the case may be, you name the rich family, the Fords, the Rockefellers, this sort of thing, so they can't just pass it on. You get into the Bill Gateses and Warren Buffetts of the world and Andrew Carnegie's that were giving away their wealth so that when they passed, all these towns had Carnegie-funded libraries and universities and what have you. So it's not just passed on and one family or one group retains power. But human nature being what it is, if you have it, you don't want to give it away unless you're looking at the end zone and going to pass on and you want to leave. You want to be well remembered generations from now. Maybe you say, I don't want to be remembered as the stingy rich guy. So that cries out for public sector involvement, right? And so how do you do it? And then you get into the design of tax systems that not only get the job done, but are bought into by the consent of the governed. If they don't feel, if the populace does not feel that they are being fairly taxed, you're going to have problems. You know, if they, because people understand, look, I understand you got to have a military, you got to have a highway system, you have to have a banking system and what have you. So there is a need for the public sector. We get that. Okay. And as long as my dollars are being used for that, but then when they're being used for stuff like what recently when Elon Musk had Doge and they were uncovering lots of stuff. Now, admittedly, they published the inflammatory stuff, but some of the stuff that they were spending money on, people were like out of their minds, outraged. But I'm killing myself here. And every paycheck you guys are taking, you know, X amount out of it, and you're using it for that, you know, that's no good. You know, that's the people are not going to, you know, be in favor. So if you want to sort of make things more equal with the tax code, it has to be accepted by the populace. You're not going to get 100% buy-in, but it has to be generally seen as a legitimate. The money is being used for what it's claimed to be used for. When you tax my gasoline and you say you're going to use it for the highways, use it for the damn highways. I don't want it being used for something else, so on and so forth. And herein lies politics and all the tricky business.
Yeah, and that's what I was touching on earlier, that it is a two-sided coin when we talk about tax policy. Is okay, well, how is that policy being implemented to give us something in return from the government? And that's always an important discussion. I want to kind of spend the last bit of this live stream with Dave's app, and I want Mike to get Dave to manipulate the app. So I'm going to put Mike on the spot. I'm going to put Dave on the spot. So Dave, I hope your app works good, and I hope it doesn't start. I hope it doesn't start spitting out new Keynesian ideas, which is just, you know, dressed up neoclassical ideas with frictions. So I hope that's not in there, because I know Mike will pick it apart. You know, I hope a Laffer curve doesn't, you know, show up in one of the plots, because
no, I've got no napkins and no Laffer curves lying around. So
excellent.
So let's
subtle but good. Yeah.
I see you have it up here. So let's let me shut down. Oh yeah, this is you've made it black. You've got the dark view. You've got
I mean, I've got light and dark mode. I didn't just throw this together and not give you light and dark mode. It's nighttime over here now. So
okay, so I'll put us down in the corner now. If we get in the way, I'll move our faces. But maybe just give another rundown on this tool. Now, Dave, are you going to make this tool available to the public at some point? Is it already 100%. Available?
Yeah, okay. Yeah. It's part of a larger experiment which I was doing, which I kind of got nerd sniped over, which was what happens if you tried to make a democracy app where people just directly vote for policies, and you build a manifesto from a community vote and just say, this is what the manifesto is. Then could you get around the, internecine political factionalism that way? But then you have to have whatever gets spat out as the policies, you have to be able to fund them. And the transaction tax can do it, because you can change the slider and say, we are going to tax the economy more to do these things, but we don't have to go cap in hand to the wealthy or whoever. We just say, this is what it is. You've asked for this. This is the mandate. So, we can increase the tax to cover it. And it turns out, at least of this experiment, you don't need to increase the tax by much at transaction level to cover extra spending. So that is a bonus as well.
All right. So just, give you a rundown. Mike, if you've got any ideas on a policy adjustment, a little dial twist here and there, tell Dave what to do. Dave, maybe just start off by explaining the interface.
I would take everybody through it one more time, including me, but for the folks who joined.
Sure. Okay. So for those who weren't here earlier, a transaction tax is a very tiny tax on every single transaction in the entire economy. You're basically removing income tax, everything else, including wealth and inheritance taxes for the purposes of this argument. And you're only taxing activity, but it's at such a low rate that the impact on your personal spending, and there is a personal one we'll get to if you weren't looking at this before, where compared to, say, earning 36K currently, having a mortgage payment and regular spending and so on over the year, you would have a, what was it, 36 roughly there. You would have an income tax system where you're going to pay about £12,000 once you include VAT on all your spending and national insurance here in the UK, which is the NHS. And in a transaction tax system, you'd by comparison be paying not only nothing. If you've got a dividend, you would actually get £4,000. So I've just set the slider to include a dividend. But let's say you didn't have that, you'd only be paying £191 for all of those transactions. Right, so it's like at first you're like, what? It can't be possible, but it is possible. It's a white paper by a professor of economics from the Chicago School called Edgar Feige. So it is possible, but you run into moral hazard because of this inequality problem we were talking about. With flat taxes, you get it's regressive. So you want to address that with a dividend. Now, I'm going to, so there's two sliders that affect everything in this experiment. And that is, of course, the transaction tax on the left and the tax-free dividend on the right. And I'm going to take away the dividend because we're going to simplify this. Let's say it's just the transaction tax and that's all. And what I've got is 3 circles. And the reason I put these together was just to give a very back of envelope view of what you probably want. In some circumstances, this might not be desirable, but let's say you probably want to keep the tax in a place where it's not going to cause a lot of friction or mess with the economy and distort it too much, which Feige reckoned was between 0.35 and 4%, right? So somewhere in there is the sweet spot for a transaction tax, and that's on both sides of every single transaction in the economy. And yet your tax bill is still tiny on a personal level. So that's just what you need to keep in mind. £229 for the year for the average person. So that's where we're up to. The measurements here that I've got, I'm trying to close the circles, the rings in, and to get it right, is the sweet spot that I've already set up, which is based on Feige, between 0.2 and 0.4% of transaction tax on each side. What you really want is either let's say I'm not going to put into surplus because we've talked about this a lot on this channel. You don't want a surplus for long. You're taking money out of the economy, but you do want either a small deficit, or depending on what the policies are required to do, you might want a large deficit spending in the year. So I've put it at 0 for now. And then the sweet spot for inflation, which would be taking into account very back of envelope of the policies that you're spending, whether they're creating new productive capacity, etc., versus whether or not you're just giving people a massive dividend, which is going to, of course, ratchet up inflation. So if I did increase the dividend, for example, then the inflation goes off the chart very quick. It disappears. In fact, becomes like back of envelope once you get beyond like 5,000 or 6,000. Inflation goes up quite high. You could offset it by increasing the transaction tax, but you're throwing a lot of sand into the economy to do it. So you've got to be careful. So the aim is to balance all these things. Now, what would be interesting with the transaction tax is once you do start to get distortions, if you were playing with this slider in real time, so let's say it was automatic, so you have a stabilizing, you have goals for the year, say inflation goals, and you use the tax to simply respond. So some days you go to pay for something, you've got a slightly different transaction tax because it's floating and changing. That's a possibility. Feige didn't talk about that, but once I started looking into it, that is actually something worth considering. So there's some desirable effects of once you've got the system in place, you could maybe do that sort of thing. So that's most of the sliders. So that you know, if you weren't here before, there is also a business calculator. I've got some basics here, all in UK tax rates and everything, but nonetheless, and also a financial one, so that we can look at this. And I'm looking at it at the moment on an annual setting, but we could look at it on monthly. And so we can break down any of those costs and the effects on with different settings on the slider if you want, Mike, whenever you're ready.
Yeah, I like the notion of in the future having a formula that links the transactions tax rate to economic activity. That's an old argument in macroeconomics, rules versus discretion. You talk about, for example, a Taylor rule for setting interest rates. Should the Fed, use a rule like that, or should a bunch of humans get in the room and decide? So that would be interesting. I'm wondering from your base run or your stable, your sweet spot where everything is your sweet spot. If you could go back there.
Yeah, lots of different places will be in the sweet spot, to be honest. So that's pretty close to it.
One,
yeah.
It doesn't matter. We just so we have a reference point.
Yeah.
And then let's see if what Keynes's paradox of thrift brings us. So if you cut back on spending.
Okay, so as in
the household cuts back on spending.
Yeah, I don't have a reverse in that. So this is very back of envelope. So that would be nice to know, but no. If I cut back on
other spending would go down, right? I mean,
other spending, other spending goes down, and in terms of your why is it? Something's gone wrong. But yeah, in terms of
people want to save more.
Yeah, exactly. Yeah, I'm not going to be able to affect it here. I don't think. I need to refresh this or something. Just let's try that again. Yeah, I'm not going to be able to affect these up here with it. I haven't got to that yet. All I want to do is one-way effect of just like what happens. What does this look like when you set these sliders? But yeah, if you are individual and households reducing your spending, yeah, that's a whole.
Yeah, again with the dynamic scoring idea
exactly.
that people will adjust and say, all right, the more transactions I engage in, the more taxes I pay. So I'm going to save for my daughter's wedding someday in the future or something. So they reduce. That would be interesting.
Yeah, well, again, because it's very small, I think for a while you wouldn't have, culturally speaking, you probably wouldn't have that effect because people would have more money in their pockets. But over time, you would start to think, because you don't have a reference point anymore to the old income tax, and employers probably adjusted and everything, that's when you get the real effects. And that's very hard to know, to be honest with you. So that's the modeling bit that, of course, is out of my league.
Yeah, well, that's why the Congressional Budget Office in the United States uses static scoring, because they admit that, yeah, people change, but we don't know how. Yeah. So the safest thing to do is assume it's zero.
Yeah.
So, go ahead.
One of the things that occurs to you once you start looking at it is it's a very good inflation modulator, if you want it to be. Because if you've got a floating transaction tax rate on the entire economy, and you can offset with the dividend, that's then if say you do need to ramp up, say you've got, I haven't got the spending up, but let's say you've got loads of dividend, it's going to cause a lot of inflation. Then why is the inflation not going up? Something's wrong. Oh, that's deflation. You're going to get, so if you're taxing at a very low rate, but you've got a very high dividend, basically a lot more money sloshing around the economy, of course you're going to get very high inflation. So that's shot through the roof. But if you threw sand in the economy to a degree, then you could reduce that again. So there's the inflation back in the sweet spot by increasing the transaction tax. But that's not as desirable as you want, of course, because every transaction suddenly got, you're starting to notice a few pounds on every transaction if you're doing that. So that would slow things down, I think.
So are you looking at, or can you look at the net? So I'm going to pay 0.7% on every transaction, but I'm going to get 19,000 pounds back. So one minus the other is how much on net did I put so much in, I took so much out. So on net.
Yeah. So you net just over 18,000.
Oh, okay. Okay. I didn't. Yeah. Okay.
So good. There's the transaction tax. So, it's still very small for individuals, but people, and again, this is when you start to find out how much capacity the economy actually has when you free things up. And I say free things up because the transaction tax economy is 30 to 40, depends on what you measure exactly, but 30 to 40 times as big as the GDP one.
So that the criticism of like a value-added tax has always been it's hidden, and that the government can kind of silently raise it and you don't know it. That would be kind of the same thing here, but since it's so small, I guess it's on. People won't notice it. But on the other hand, if they're getting back a big dividend, are they going to care? Probably not.
If they're getting that back, but then you've got people that won't want to see that spent. I don't know who. I want to talk to them and try to convince them that's crazy. But this is also I should, but full transparency, I'm also a writer over on Substack, and so I look at what sort of systems we need to think about both culturally and economically in the near future and beyond. And when you're looking at high levels of automation, which may or may not happen, but we're looking at, we have been automating massively in the last 50, 60 years, then the transaction tax with a dividend may be useful if you want to look at how you can actually spread money into the economy to make sure people are still consuming, if you want to hold together a semblance of the same system that we've got now. So that's just so you know, that's kind of my thinking as well. But the Mike, what you're saying about the dividend is right. Of course, people aren't going to care if they're getting that much of a dividend. They're not going to care about the tax they're paying, but you'll probably find more likely this would actually cause a lot of inflation, and you probably would only get, we're talking a few £100 a month or something like that, which over the year would be, 4,000 or 5,000 probably to start with. And what I would say is, because we don't know how it would distort the economy, is again, you'd want it in the policy mix, but you probably set it very, very low to introduce, or maybe even zero, and then you introduce it over time as you start to see it.
So in the simulator, what, aside from returning a dividend to the citizens, what other uses for the tax revenue is there in your simulator?
Other uses? Oh, so at the moment, it's set to simply reflect the current UK budget, which is roughly 1.2 trillion in total, and then take into account the 200 trillion in circulating transactions in the economy as a whole. So then getting into the, I guess, politics of what it's going to be used for, again, that's down to politics. But the point is, this is about managing the currency and making sure that it's not a regressive tax. But then you've got to have conversations about what is it being used for? Because if you just say crank up the dividend or even the transaction tax and then don't spend that money on productive uses, for the government facilitating more manufacturing capacity, for example, then I think you have a big problem.
So for example, the UK's national healthcare system is in that budget.
Yes, it is. Yeah. It's all in there.
Right. Okay.
Yeah. So
they're paying 0.38% right now on every transaction, and they're getting national defense, national health care, and a small dividend, for example.
On this calculation. And what I think is, at first, what will happen probably is I don't know for sure, but I think you'd end up with an introductory rate that is higher until you work out a few kinks. But I think, so keep in mind that the 0.35 is a percentage that was done by Feige on the US economy in 2000, and this is the UK economy in 2025. But the calculations, at least back of envelope, I've tried to keep as faithful as I could to that. So I think that might be out by a bit, and that would need to be worked out. But of course, I'm not funded to do any research and wouldn't want to anyway.
See, the usefulness of this sort of simulation, this type of simulation I do, similar to what Ty does, is not so much that it's truth or that we should say, oh, exactly, here's what will happen, but rather this is a sort of tool that can generate conversation. And I like the idea of you, in some sense, bypassing the politicians and the economists and going to the people with this in the media, and let the media drive people, let school teachers use it and bring it into the classroom and say, hey, let's take a look at rethinking the design of, if not all of society, at least some important aspect of our socioeconomic system, right? And let's think about this, right? And, maybe there's a better way to run the railroad. And again, then you get into all the lobbyists who are going to undermine all this. But that's where you start, is it seems to me you get the citizens to understand this and ask for it, right? Absolutely. And the politicians obey.
And just on the saving that people have, when you get rid of income tax, you free up an enormous amount of innovation and thinking, because of the simple fact that people are mostly struggling and stressed by this. I think what I would like to know from you guys as modelers is what tends to happen in a system like this when you change it so that there's more spare capacity for people. Does it very quickly settle into, well, that's my expectation? So do you get, for example, even if you don't include a dividend, if you do change this so that people are not being taxed so much, do they go out and work more? I mean, do you know what, this is the stuff that would have to be modeled. Do they go out and work more? Do they spend more? Because if you're not getting taxed, you might work more, but you also got more cash, generally speaking. So you might cause some inflationary pressures there, which are hard to model at this sort of scale, at this sort of level.
Yeah, and I think the system would adapt to, you mentioned sort of a reference point that would fade over time as you transition from an income tax system to a transaction tax system, for example. The system would adapt and people would begin to adopt a different reference point or set of reference points. And then if you were pushed away from those, they would react to that, right? So systems adapt, right? I think now, and the tricky business is, well, how do you faithfully capture that? And the answer is these models are not truth. We never claim they're truth. We're taking our best guesstimates of what we think we know about how the systems works or could work, and we represent them formally. And we let the machine mercilessly trace through the implications. And sometimes our thoughts are spot on, and other times we're surprised when the machine reveals to us that, hey, what looked like a good idea on paper isn't a great idea, or it's a good idea in the short run, but in the longer run, when the system adapts with all the feedbacks and such, you go back to where you were, or you're worse off than you were. Those are the sorts of things that are quite useful, but nobody's going to look at your model or my model or Ty's model and say, oh, because of that, we're changing everything.
Yeah. Why not? But anyway,
you wish it would, I suppose in some sense you wish it would, but people they don't do that. But if it becomes a routine part of the conversation.
Yeah, absolutely. That's the level I'm at. That's the stage that I want to get to, is where people at least have conversations, because I thought this is so batshit crazy. There's no way this could possibly work. And then when you dive into it and you find that people have taken it seriously, to the degree that Steve and Phil looked at it as well, you go, maybe there's something here. So that's encouraging. I tell you what would be helpful to look at, I reckon, is we looked at the individual very briefly, and you can see that it's very advantageous to the individual because you're paying a lot less. But there's business. Businesses are also better off under a transaction tax, and what you find is that it's only when your profit increases massively, quite a lot actually. You'd have to have really low payroll and operating expenses. So maybe some digital startups that were that had no overheads because they had no staff, they might not, even then they're still the same. It's very hard to see how they wouldn't be better off under over corporation tax. They'd be better off under transaction tax. It's only the financial, if you weren't here earlier, because of course people that are maybe day trading, or they are doing high velocity trading, perhaps mechanically or with bots, then you're gonna find you're gonna be getting quite a lot. So let's say you did a buy order. I don't know. We're looking at annual here, but still, let's say you bought like nearly 9 million worth of orders. You sold the same because you're a buyer and a seller, buy, sell, and you might have done some other transfers. We don't know, and you want to make some profit. You want to make, let's say in a good year, you're going to make like 20 odd percent. You're a hell of a trader. So under the current system, your stamp duty is going to be huge, but actually the transaction system in that one is not so bad. It's actually quite good, which I'm surprised to find. So I probably stuffed up something in the last update, but I don't think that's, hang on. What am I looking at? Is it in millions? Yeah, transactions. Oh, we could, because the tax is quite low on that one. The GST rate is 20%. No, that's right. It's because the profit is so high, which is unusual. So let's say you made 6%, then the current tax system, no, it's still better. So it swings and roundabouts. I'm definitely going to interrogate the back end of that, but I'm pretty sure something's not quite right, because I think the transaction tax is generally a bit higher. But by the way, it's not an enormous amount. It's just that if you buy and sell in huge quantities, it has to add up. It just has to, and not just in a linear sense. But it has to. It's not going to be. What do you call it? It's not going to be cumulative. You're not going to have snowball effect on any of these transactions. It doesn't work like that. So apart from being unhappy with the financial calculator, I don't know exactly if that one's correct. The other two are based on back of envelope transaction costs. And yeah, that's the nuts and bolts of it all.
Well,
good for you, Dave. Well done.
I always think about, you guys touched on it a few times. George Box, what did he say? What's his famous quote? All models are wrong, but some are insightful. Dave, I think you passed his base case test. Whether there are some back end problems with, some little parts, it is definitely very insightful, right? And it gets the conversation going. And I like that a lot. And I'm so inspired, Dave, by all of this today, that I'm going to try this transaction tax in my national model. It's going to take a little work to do the equation. Yeah. But I kind of want to just explore that and see how that works out in an aggregated model, because that would be of interest. The chat, where is the chat?
I've now declared it my duty to convert you, Ty. We'll see. Can I turn you into a transaction tax zealot?
I am on so many conversion lists. Most of them are from my significant other. And so there's a long waiting list of conversions up ahead. I know it's sounding very loaded when I say that.
It does, yeah. I don't want to know what the other ones are.
I did run a poll while you guys were talking. I used the YouTube poll feature, and I asked what people's favorite tax systems were. I did not put the transaction tax in it because I didn't want to bias the conversation you had. And Tony ended up calling one voter that voted for a consumption tax a fascist. So there was some interesting chat going on there. You know how Tony is, guys.
Very measured. Tony, always measured in his...
So
was very nuanced.
That was going on. You only have four options. So I put income tax, consumption tax, land value tax, and a wealth tax. And the land value tax won out of those four options. And again, we've discussed way more today. The poll wouldn't allow me to do more at that time. So congratulations to you LVTers out there. You're winning the public debate on the Relearning Economics live stream channel, I guess.
Something. Yeah, and look, if someone was said tomorrow you have to change to a tax, you want, and it was like it's either the land value tax or nothing, I'll be like, of course I want the land value tax. That is definitely, at least back at reading the back of the pamphlet, far better off under LVT than we are under the current system. I think that's the main point of the debate, is we do need to talk seriously about the possibility of changing, not because it's going to happen next week. Like Mike said, changing these things without some massive upheaval is probably for the birds. But if there is a crisis, you want to be able to have investigated these things and actually know that there are other options that could work. And that people are also much more open-minded if there is some sort of crisis. So I'm not going to will a crisis on just to be able to change the tax systems. But I think that's the way to think of it. If there was a reason to change the tax system, or it was up for debate and everything was open again, you want some ideas lying around, basically.
I agree. Mike, any final thoughts for the show today before we close it out?
Yeah, well, I mean, this is a whole area of economics called public sector economics, taxing and spending and different types of taxes and who bears the burden of these things, double taxation. You get people saying, hey, before I got my paycheck, I had, payroll tax taken out in the States for Social Security. I had income tax withheld at the federal level, income tax withheld at the state level. There's probably a couple other dings and dangs. Now I got on net what my paycheck, and I go buy a share of stock. And if it produces a dividend, that gets taxed. Then I take the dividend money and I go buy gas for my car. It's taxed. And then we get the idea. People are like, this is crazy, right? So the tax system is a necessary evil, and getting it accepted by the populace is fair. And like I say, very few people are like anarchists. Like we want no government. We just want, a walled city states or something, and with militias running around or something. No sane person in modern time believes that. They understand there's a need for the public sector, but they want it not corrupt, fair. People pay their fair share. They understand it, and what have you. And therein lies why we have public sector economics. At least we study this stuff, and then the politicians go ahead and do whatever they're going to do. And the last thing, to reinforce what we said several times, is it's path dependent. Nobody in their right mind would design the U.S. tax code as it is from scratch. It's crazy. You call 5 different people. Reporters do this at tax time all the time. They call 5 times to the IRS, get 5 different people on the line, and they get 5 different answers to the same tax question, right? It's crazy, right? And so people, of course, they're going to evade taxes when they can and think it's a joke, and they're outraged when they see what their money's being spent on, blah, 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 all that stuff. So that's not a good way to run the railroad. We've been discussing ways you might redo it, but breaking out of the situation we're locked into it's going to take a crisis or whatever, because there's too many forces that are keeping it where it's at. So it's a hell of a thing.
Yeah, and I would say that whatever system we did, let's say we did change next year to LVT or resource tax generally, or even transaction tax, whatever, I think over time you would get this mission creep of things that, over a few generations, there would be exemptions and so on, and it would just end up layered back again. So I don't think what you get, I hope with any changes, though, you do get better problems. So you might be dealing with a much more streamlined system for a while, at least, and that frees up capacity. And that was the other thing that attracted. So basically, one thing I love about LVT, you can tell without really knowing too much detail about it, is compared to the system we've got, it's the simplicity of it. Same with transaction tax. I don't know about resources. They're not going to be able to comment on how simple that is to implement. But definitely, and compared to wealth taxes, which are not simple to implement and require all sorts of, working out what is actually wealth and so on. So I think simplicity also counts, and simplicity counts in terms of not just changing to it, but how it operates day to day. So that's and
simplicity is also good for having the public understand what's happening.
All right, guys. Well, we're at the top of the second hour. It's been great. I'll see everybody on Sunday for my live stream at 10 a.m. Pacific time, 1 p.m. New York time, and something in Europe and something in the UK, blah, blah, blah. We'll see Mike, Dave, and Professor Steve Keen back next Friday, same time. See you later, guys. Bye-bye.
You are now relearning economics.